The roaring 20s are in full swing, and as millennials are set to become the largest living generation, according to Pew Research, we're getting a closer look at their investment habits. Bill Capuzzi is the CEO of Apex Clearing. Bill, interesting new research out from you guys, and the big takeaway, millennials are invested in the streaming wars in a big way.
Yeah, we call it the Baby Yoda war, at least starting. It's interesting. The top 10 stocks that we hold across a series of about 750,000 millennials, the top 10 hasn't moved that much over the last couple of years. And that's because there's a lot of positions, you have Apple, you have Amazon. It is striking to me that Disney went from outside the top 10, past Netflix, to number 7 on the list.
You think it has everything to do with the Mandalorian and Baby Yoda?
Baby Yoda. That's the Baby Yoda effect. Absolutely, right? I think there's the streaming wars are coming, right? You see Apple obviously is there, Amazon is there, Netflix, Disney. So in the top 10, we have 4 names that largely push, streaming service. And I think it's going to continue with companies like Roku going into.
Yeah. I was not surprised by this list, I have to say. Were there any surprises here for you? I mean, I know they also got into payments. Again, not a big surprise because a lot of millennials are paying differently than we were when we were coming up, right?
So the one name that, if you look at the top 10, most of them make a lot of sense. The one that sticks out is Berkshire Hathaway.
Well, they see Warren Buffett on the internet. They see his photo. They see how much he's earned over the past couple of years and go out and buy some Berkshire.
I like that. They're listening to the Oracle of Omaha.
That's it. That's exactly it. And the other part of it is, so it's Berk B, right? So it's, part of the challenge for millennials is the average size of position that we're holding is $2,300. So think about that, right? You can't buy Berk A. It's too expensive.
Here it is, right? $340,000. It's kind of tough. Yeah.
What is happening in the industry, and we're helping drive this, is fractional share trading, right? So dollar investing, being able to invest in stocks regardless of the price, just based upon the amount of money you have in the account. And it's going to be interesting over the course of 2020 to see how that's going to affect the number of names that millennials are investing in.
Do you think millennials are out to lunch on the concept of portfolio diversification? I look at this research, and they're all tech names that have had significant runs the past year.
So I ascribe that to more of the Peter Lynch, invest in what you know, invest in what you believe in. If you look at this list, roughly 30% of them are tech companies, and that have IPO'd over the course of the last 10 years, right? In their generation, as they've grown up and started to invest, these companies have come online, and they're things that they're using, right, for the most part.
What about how they're investing? Is it mutual funds? Is it individual stocks? Are they taking advantage of dollar cost averaging? Can you give us some insight?
Yeah, so Apex Clearing is a custodian. We hold the assets of roughly about 8.5 million customers. A vast majority of them are younger because we focus on the disruptors in our industry, not necessarily traditional advisory. Of those 8.5 million-ish customers, roughly divided in who invest in passive investments, meaning just let me give my money to an advisor or a robo-advisor, versus those that invest in individual stocks. The millennial index is purely on people that are actually stock picking.
They're stock picking. Okay.
These are people that are actually choosing these securities versus the other side of our portfolio, which is people that are giving money to an advisor who is choosing securities on their behalf.
One of the names on the list that saw the biggest jump is NIO. This company is not making any money. How big a problem is that?
Chinese electric car company.
What are millennials buying?
Well, it's tied into, look, Tesla's number 3 on the list, right? You have Uber that's on the list as well, and Lyft, ties into sort of this movement over the course of the last number of years and into the future in terms of how transportation is going to continue to evolve.
Bill, I'm disturbed here. I think millennials need to pick up a textbook.
Maybe they're hedging their bets. So they're like, I want to be in the EV space. Let me do it in China. Let me do it here in the U.S. with Tesla. I don't know. Maybe it's not so bad.
Well, look what's happened with Tesla in terms of opening up their, the plant and how fast it's gotten up to speed. I was over in China recently, and for sure, there is some mania around electric cars in China. I'm not surprised.
Are you surprised that Uber outranks Lyft? Lyft, I think, by all indications, has been better run than Uber.
I would agree. Personally, I would agree. I'm not surprised if you look historically. We've been running this for the last 2 years. Uber, you guys were talking about Beyond Meats.
Yeah.
Uber's had first mover advantage. I think it's more mature. People are investing in it. It is moving, though, right? The two of them are moving. Lyft is starting to encroach on Uber, which doesn't surprise me either.
Yeah. Well, thanks for giving us a look at the inside the mind of the millennial investor, Bill Capuzzi of Apex Clearing. Thanks.
Thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.